Money is inherently social. It is managed at the household level in many cultures. There is also a rich history of forming collectives to improve the bargaining power of individuals against the institutions of the state, market, and community. Self-help groups, trade unions, cooperatives. There are several examples of it in whichever country you choose.
ఈ యొక్క 70,000 60,000 ఎత్తుబడి తీసి వాళ్ళ భార్య పిల్లల పేరు మీద ఫిక్స్డ్ డిపాజిట్ చేసేస్తాం.
These collectives have been instrumental in encouraging marginalized groups to save, secure, and invest their money. But through our research, we observed that they can be wary of digital finance. They prefer managing their money through local initiatives that can be held accountable more easily. Some service providers are trying to bridge the trust and access gaps by working more closely with them. They often set up financial and digital literacy camps like this one in Uganda. These women belong to the Village Savings and Loan Association in Gulu. They were offered new smartphones during the camp with whatever help they required to set themselves up. But this approach is individual. The camps are organized to get the maximum number of onboardings at one go. They do not grow from a true understanding of collective power or sharing. The operative keywords being greater agency, together. In this episode, we will cover a few stories to show how people express their communal values at the micro level in their day-to-day use of digital finance, though the system is not designed so. People share accounts, devices, phone numbers, and even IDs to get by. Yamuna is a 56-year-old fisherwoman in Visakhapatnam, Andhra Pradesh. She uses her son's QR code to accept payments. This helped her become more fluent with digital finance, with the result that she can now help other merchants in the market. And she shares her QR code with them. It is now a community resource. But it is important not to romanticize sharing. It is a necessity in resource-constrained settings. We observed how many households had only one device for all their members' needs, and women got the least access due to gender disparity. This is Taslima from Lamor Nihat in Bangladesh. Her husband sends money to her father-in-law or neighbors' phones when he is away. She does not have a device of her own, and the family is equally conservative about Taslima's daughter's access to a phone too. In Indonesia, as in many other countries, parents share their phones with children to be more frugal, but the device gets crowded quickly with games and other leisure apps, leaving no storage for DFS. Phone numbers are used to verify an account opening, but they too are frequently shared within households, even if the members have separate phones. There is a tendency to link all the utility and financial services to the numbers of the person who is most literate, street smart, tech savvy, or powerful in the family, as we saw in Mahadev's case. He is a 32-year-old auto driver in Araku, and the shared phone is almost always with him. His wife has given his number to open her account at the regional rural bank, leaving him in a fix. He needs to find an alternative to set up his own account. The boundaries of sharing can get inadvertently blurred as people learn to navigate their way through digital finance. We met Bimo in Indonesia. His friend used his number on a digital lending platform without his knowledge. He got to know of the breach only when he started getting incessant calls to repay the loan, leaving him disillusioned.
Buat kredit HP ya, Mbak? Telepon saya itu.
Gimana dia ngomong apa?
Yang ngomong, Mas ini gimana? Saya nggak tahu apa-apa tuh Pak, aku juga gitu. Terus itu selama 3 hari itu ditelepon terus ya. Kalau tidak dibayar bunganya sekian.
The codes of privacy are also differently understood in a collectivist culture and constantly renegotiated for the digital realm. Nurul is a 39-year-old agricultural worker from the rural region of North Sumatra. She is in charge of setting up her family's accounts for different services. She uses the same PIN and password everywhere to ease matters for herself without worrying too much about digital or data harm. This attitude of convenience over caution is also seen on the supply side, surprisingly. Many mobile money agents in Bangladesh set the same PIN for all their customers in view of everyone who's at their shop without any regard for privacy or security. It may sound outrageous at first, but some people also use other IDs to open their account because it is too cumbersome to get their own card and keep it updated with the main registry or database. This is Joyce. She has 2 SIMs on her ID, one for her sister and one for herself, because she wants to register for mobile money. This is particularly challenging for young people when they start earning, if they can't access digital tools only because their paperwork is not in place. Given that they are the most active users of technology, they have to borrow their parents' IDs. Take Ramon Hossain, a 19-year-old student for instance. He got a SIM and opened a mobile money account for his house using his mother's ID because he couldn't apply for one until he reached the legal age of 18. It takes 3 to 5 years to get a card after you submit your application. This highlights the need for programming that is sensitive to the social dimensions of money at the household and community level. We need to keep our eyes on both sides of the spectrum to identify who is most vulnerable within these units and who is tech and financially fluent enough to help them. That is the key to creating more inclusive and impactful services.